All right, so let's talk about it. Home affordability. If you've been thinking about buying a home, you've probably noticed it's not cheap, especially here in Colorado and the Colorado Springs area. Between high mortgage rates, sky-high home prices, and rising insurance costs, as well as a host of other things that we have going on in our market right now, a lot of people are asking, is buying a home even worth it anymore? But let's talk about it. So today we're going to break it all down. The numbers, the challenges, some actual solutions that can help make home ownership more attainable for you. So stick around, make sure I'm going to share some home insider tips that can save you thousands of dollars if and when you're ready to buy a home. All right, so number one, the state of home affordability in 2025. So let's just start with the big picture. Home prices are near record highs. And in many cities, they've gone up 30 to 50% over the past 5 years. That means homes that used to be affordable, not so much anymore. So let's take a look at median home prices from 2019 to 2025. Obviously, we had that huge peak around the pandemic, and so these numbers are going to give you a little bit of perspective of what's going on. The national median home price in 2019, $275. Fast forward to 2025, that same national median home price, over $400,000. This is a huge jump. That's crazy, right? But that's not the only part of the problem, because even if you could afford the price of the home, there's still another issue. That issue, mortgage rates. Oh, yikes. So mortgage rates, why are they so high? So let's do some quick math. Just a few years ago, again, those pandemic years, mortgage rates were 3% or less. Now, granted, those were probably artificially low for too long. That's a conversation for a different day. But what it meant was a $350,000 home would have a monthly mortgage payment of about $1,500 a month. Pretty doable, right? Fast forward to today. The same home, that $350,000 house at 7% interest, which is about the going rate right now as of the date of this recording, that has a payment now closer to $2,500 a month. That's $1,000 a month more. Now, when you're out there trying to buy eggs, that's a big deal, right? So let's take a look at the payment. 3% interest rate, $1,500 a month. 7% interest rate, $2,500 a month. So that's a lot. $1,000 a month is a bunch. So why are rates so high? Well, the Fed Reserve has raised the rates to fight inflation, and mortgage rates followed. They've come down a little bit from the peak last year, but they're still way higher than they were a few years ago. So should you wait for rates to come down? I'll answer that in a bit. So homeowners insurance, it's on the way up. Here is why. Not the least of which is Ryan started the fire. Dwight, right there. No, there are fires in California, and I know what you're thinking, but that should only impact California. We all understand now at this point that's going to have a national impact, not just a state impact. So here's something people don't always think about when they buy a home. Homeowners insurance matters. That price matters. The cost of that homeowners insurance has only climbed in the last few years, and it impacts your monthly payment. So in a lot of places, insurance rates have doubled, right? Some people are just leaving the state altogether. I'm sure that you heard a lot of news stories, so on and so forth, about many insurance companies that pulled out of California or certain regions of California, and it's in their entirety. That's not an isolated incident. It happened here in Colorado a couple of years ago where companies just wouldn't offer insurance, and we're kind of seeing it again between wildfires, wind and hail, things of that nature. Insurance companies just aren't insuring people. Those weather events, whether it be hurricanes in Florida or the wind and hail or the fires here or the fires in California, whatever that looks like, that's going to have an impact on those insurance costs. Rebuilding costs. I don't know if you've noticed, it's more and more expensive to use those building materials, and those cost more, so the insurance rates have to go up to counteract that. So that's a big deal as well, the cost of building. And then insurance companies just pulling out of high-risk areas. If no one else has any insurance availability, well, those that offer insurance, guess what they're going to do? You guessed it, that price is going to go way up. And then as we talk about all this, you have to understand, those insurance costs, that can impact your monthly payment to the tune of hundreds of dollars a month, and you have to keep that in consideration. All right, and then there's some other hidden costs too, making homes more expensive. And so you thought you were done. The insurance, the mortgage rates, all that good stuff. Well, no, there's a few other fees that might get overlooked as you're doing the home buying process. Property taxes, obviously here in Colorado Springs, we've seen those go up over the last few years. I would say nationwide, you've probably seen a pretty substantial jump in property taxes just because of the value of the homes going up. So as home values go up, well, taxes go with it. So taxes are adding to that monthly bill. And then you have HOA fees. And so if you're buying in a neighborhood that's in an association, that can be several $100s a month as well. Now, granted, the association insurance prices are going up because their costs went up the same as a homeowner's did. So those fees go up. Then maintenance and repairs. So expect to spend about 1 to 3% of your home's value every single year on upkeep, whether that be roofing maintenance at some point. Maybe you have water heater, furnace, just regular maintenance to keep your home up and running. That costs money. So the reality of it is when people are calculating their monthly payment, owning a home costs more than just the mortgage. There's a lot that goes into that payment. So all I have to say, the question is, should you buy a home right now? And here's how you save a little bit of money if you are buying a home. So, okay, I know every bit of information I just gave you sounds really depressing, but here's the thing. Homeownership is still possible. You just have to be smart about it. And that's where we come in over at the My Front Range Living team. So how to make buying a home more affordable. Number one, buy down your interest rate. Lenders let you pay up front to lower your rate. So sometimes sellers will even pay for it. Look for homes with lower property taxes and insurance costs. You just have to keep an eye out for where you can get the best value for your dollar. Negotiate with the sellers. That's a given. That needs to happen on every single contract. That's why representation is so important when you are a buyer, because in many markets, sellers are offering, like I said, they're offering concessions on the interest rate cuts. They're offering lowering the prices, closing costs, all of that good stuff. So there's a lot of different ways that you can negotiate with the sellers when it comes to buying a home to bring your costs down. This is one of my favorite points. Expand your search area. One thing that we find when people are looking to move to Colorado Springs is, yeah, I want to live in Colorado Springs. And that's great. We want you to live in Colorado Springs. We want to be your neighbor and we want you to enjoy our community. However, some of the outlying areas might be a little less expensive. So just 15 minutes outside of town can save you a lot of money on those prices. So if you go out to Falcon Payton, you go down to Fountain Widefield, you go to Security, you might even head up to Woodland Park if you wanted to. There's a lot of different options when it comes to living in the area, but not in Colorado Springs specifically, and you can save a little bit of money. And then last but not least, new construction. It's not always the best option, but in some cases it can be because of the incentives that they are offering, whether they're offering a certain credit in the design studio, or they're offering great lending opportunities. They often have less expensive rates and different programs because they have in-house lenders, and that can help you as well. So that's going to make a huge difference when it comes to your monthly payment. So all of that to say, don't just accept the high cost, get creative. That's where, again, consulting with a real estate agent is going to help you a ton in that process. Here's the deal. Yes, their homes are expensive right now. I get that. I see you. Interest rates are high, but there's ways to make it work. If you're thinking about buying, my advice, do your homework. Shop around with lenders. Negotiate. That's where we come in. We're helping you understand everything and where you might be able to get the best deal. And most importantly, buy a home that fits your budget. I know that sounds simple, but you'd be surprised how often we hear somebody, I think this is my price point, blah, 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 and they get in that, they lock in there. And then they find out that it's probably going to be a little more affordable lower than that. And it's important to understand, just find a home that fits your budget. So what's the biggest thing stopping you from buying a house right now? We'd love to know, is it the rates? Is it the insurance costs? Is it taxes? What's stopping you from buying a house right now? Really interested in that, just our own curiosity. Thanks for stopping by. We look forward to seeing you soon. Have a great day.